On the weekly time frame, the price of Bitcoin displays a bearish breaker setup, indicating that buyers should exercise caution. Because it does not yet accurately predict a reversal, this signal is ambiguous. As a result, it is still possible for the current BTC rally in 2023 to continue. Bitcoin value appears to have framed a conclusive base in the last quarter of 2022, which has prompted an unstable meeting. The year-to-date execution of BTC remains at 70%, with a neighborhood top of $30.968. The most recent rise in the price of Bitcoin put it into a weekly bearish breaker, taking it from $29,247 to $41,273. A zone in which the asset is subjected to intense selling pressure is known as a bearish breaker setup, as was previously discussed in depth. The down candlestick in between the two higher highs is the center of the technical formation. Investors need to keep an eye on the price's reaction to the previous down candlestick after the asset makes its second higher high and begins to retrace. On the off chance that the quick breakdown of the valley prompts the making of another lower low, it affirms the development of a negative breaker. To open short positions, market participants must now wait for the asset to pull back and retest the breaker. What are setups for breakers? After entering the bearish breaker, the Bitcoin price has already begun to experience a great deal of selling pressure, as previously mentioned. Truth be told, BTC has scattered the earlier week's benefits and presently sits at $28,237. The price of Bitcoin can move in either of two directions from here. A resumption of the bull run, which extends the rally and may result in the formation of a local top at $35,260, the midpoint of the breaker, or $41,273, the range high. A fair value gap, FVG, and the midpoint of the bearish breaker will meet if Bitcoin price continues to rise. The FVG, set apart in orange, stretches out from $34,277 to $37,406, which is an ideal spot to book benefits and expect a nearby top development. In the event that BTC moves higher, it will probably frame a top at $41,273, which is the breaker's furthest cutoff. The bear's ongoing attempt to lower Bitcoin is represented by the second path, which is a stairway to the ground floor. The price of Bitcoin will therefore aim for the weekly FVG, which ranges from $26,591 to $22,591. It is interesting to note that long-term holders are likely to begin their accumulation at the $22,591 and $26,591 critical support floors in this area of inefficiency. Particularly for long-term holders, the supposedly pessimistic outlook described in the second point is not really bearish. For a definite large-scale examination of Bitcoin's technicals, look at the article connected underneath. On-chain metrics may provide a clearer picture and a direction for the Bitcoin price's next move despite the ongoing bearish outlook. The global in/out of the money, GIOM, model developed by Into the Block demonstrates that the northbound move in the price of Bitcoin is somewhat less crowded. As found in the picture underneath, generally 2.3 million tends to that bought 1.08 million BTC at a typical cost of $30,392 are out of the cash. Following this group is another, where 4.77 million tends to that collected 1.95 million BTC at a typical cost of $39,332 are submerged. Due to their sheer size, the second group of out-of-the-money holders are likely to pose a significant selling threat, which could result in a local top formation rather than the first one. The support cluster, which runs from $23,039 to $28,107 and saw nearly 3.7 million addresses purchase 1.86 million BTC at an average price of $25,433, lends credence to the long-term bullish thesis for Bitcoin price. These financial backers are probably going to aggregate more BTC should the cost slide lower. Although GIOM provides a comprehensive view of key levels, it does not exhibit a bias in one direction. Therefore, the price of Bitcoin could change at any time. Let's look at the metric known as Daily Active Addresses, DAA. The number of active participants interacting with the Bitcoin blockchain has remained above 1 million since January 2023. After a concise plunge on Walk 27, this measurement has created better upsides and gives no indications of shortcoming yet. This indicator's further examination will be helpful in determining whether investors are leaving the network, which could indicate a capital flight and a reversal. Even though the DAA metric has a bullish bias, it shouldn't be used alone because it doesn't show users the whole picture. The whale exchange count is one more significant metric that can be utilized to figure out what brilliant cash financial backers are doing. The spikes in this index can be used to time local tops and bottoms and track transactions worth $100,000 or more. After the price of Bitcoin rose from $27,900 to $30,000 on April 11, this metric observed an unusual uptick, pushing it from roughly 1,700 to 3,200. This could indicate that these investors are looking to sell and book profits. Obviously, the spike in DAA combined with the uncommonly high whale exchange count, takes note of that a negative viewpoint is persevering. Last but not least, the supply distribution chart reveals that the percentage of wallets holding between 100 and 1000 BTC increased from 19.97% on April 18 to 20.07% on April 21, indicating that this group of BTC holders accumulated. Be that as it may, the equivalent can't be said about the 1000 to 10,000 BTC proprietors. After the crash on April 20, these investors have started selling their holdings. Currently, this metric does not assist in analyzing directional bias. However, with the weekly close and the start of a new week, if the second group of investors begins to accumulate, it may indicate a unified outlook from long-term holders. In such a case, it could mean a bullish viewpoint and could assist with deciding Bitcoin's bearing, yet for the present, there isn't an adequate number of information to evaluate.